All right, today we're jumping into a very specific financial tool, one that's designed for couples who are thinking about the future, about their legacy. We're going to break down exactly what survivorship whole life insurance is all about. So let's start with the big question, right? For any couple that's building a life together that has these shared financial goals, how do you even begin to plan a legacy that's going to last? And this is a challenge pretty much everyone faces. You're trying to do two things at once. Make sure your own future is secure while also making sure the people or even the causes you love are protected down the road. Well, that's where this particular financial product comes into play. The material we're looking at today frames it as a kind of two-in-one solution that's built to tackle this exact problem. So what exactly is it? Okay, survivorship whole life insurance is a single policy that covers two people. But here's the key, and this is really important. The benefit, that big payout, doesn't happen until after the second person passes away. So how does this stack up against just buying two separate policies? Well, think about it. With two individual policies, you're paying two separate premiums for two separate death benefits. With a survivorship policy, it's all rolled into one premium, which is often lower, for one combined death benefit that's really aimed at those big shared legacy goals. And the bottom line here, it really comes down to efficiency. Because the insurance company knows the payout will likely be much later, the cost can be a lot lower than buying two separate policies for the same amount of coverage. You're just getting more bang for your buck. Okay, so that's the basic idea. Now, let's kind of pop the hood and look at the core features of the policy. The whole thing is really built on a foundation of guarantees. And this is where that certainty really comes in. You get three core guarantees. First, the amount of life insurance, the death benefit, is guaranteed. Second, your premium is guaranteed to stay the same for a specific period. And third, the policy's cash value is guaranteed to go up every single year. Let's dig into that cash value thing for a second. How does it work? It's actually pretty simple. You pay your premiums. A portion of that premium helps build up the cash value. That value then grows each year, and you don't pay taxes on that growth along the way. And maybe most importantly, it's guaranteed not to go down just because the stock market has a bad day. All right, beyond those rock-solid guarantees, there are a couple of other really powerful features that can help maximize your legacy. We're talking about tax advantages and the potential for dividends. First up, and this is a huge benefit of life insurance in general, the money that's eventually paid out to your beneficiaries, it's typically received completely income tax-free. That means the full legacy you intended to leave behind is what they actually get. And the second tax advantage goes back to that cash value we were just talking about. As it's growing year after year, you're not getting a tax bill for those gains. That tax deferral lets the value compound and grow a lot more efficiently over time. Now, let's talk about dividends. These kinds of policies are called participating policies, which is just a fancy way of saying you might get a little piece of the insurance company's financial success. Now, these dividends are never guaranteed, but if you do get them, you can use them in really cool ways, like helping to pay your premiums or even buying more coverage to grow your legacy even bigger. And just to give you some historical perspective on that, check out this statement from the source material. While they're always very clear that dividends aren't guaranteed, they point out that MassMutual has paid them to eligible policy owners every single year since 1869. That is quite a track record. Okay, so we've covered the structure and the benefits, but to get the full picture, it's so important to understand a few key things you need to consider, plus some optional features that can really add some flexibility. And this is a big one. The source material is super clear on this. Life insurance is for long-term goals. It's not a savings account or a short-term investment. The cash value can be pretty low in the early years, so this is all about playing the long game. You can also customize your policy with things called riders. Think of them like optional add-ons. For instance, a waiver of premium rider could cover your premium payments if one of you becomes totally disabled. Another really valuable one lets you access a portion of the death benefit early if the surviving insured person is diagnosed with a terminal illness. And finally, we've got what is probably the most important point of all. We're breaking this all down to help you understand how it works, but this is not advice. As the source material strongly recommends, you should always talk to your own tax and legal experts to figure out if a strategy like this is the right fit for your personal situation. And that really brings us full circle, doesn't it? We've seen how this one product is specifically designed to help couples with those big, long-term goals of transferring wealth or funding retirement. It's a tool built for shared planning. Which leaves us with the final big question to think about. What's your next step to securing your legacy?